Today we are going to take a look at Moody's and their most recent earnings announcement. We'll also go over the next 3 years and what could happen that could have a big impact on their business. And we will leave off the video by going over their valuation and whether or not I am buying the stock. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Before Moody's released their earnings, the stock was trading around $405. However, after they released, the stock traded down over 10%. And for a stock like Moody's, a 10% downward move is massive. We could see that over the course of the last year, the stock is up 18%, and it's been a very consistent, slow upward 18%. There are no very drastic moves. And even over the last 5 years, we could see that really the only drastic move is back in 2020 when the whole market went down in a massive way. And what led to the stock dropping in such a major way was not only top and bottom line misses, but also poor guidance for 2024. They reported $2.19 of EPS, which missed the mark by around 5%, and top line revenue came in at $1.48 billion, which was a miss of around 0.5%. What's surprising is even though they missed their bottom line numbers by coming in with $2.19 as opposed to that $2.30-ish, they still saw an increase in their EPS of 37% year over year. And top line growth came in at 15% year over year. For the full year, however, they only showed 8% growth, coming in at $5.92 billion of revenue. One thing to keep in mind with Moody's is how stable their business tends to be. And what that ultimately leads to is a lot of confidence from analysts that Moody's will be able to achieve their estimates. And what that means is when Moody's misses, it is a very bad thing for the stock, because a lot of confidence in earnings means that investors are expecting Moody's to perform at the very least at those estimates, and coming in with a miss just leads investors to question how stable of a business Moody's actually is. And guidance for 2024 wasn't incredible either. We see that their adjusted EPS estimate for 2024 came in between $10.25 and $11 per share. On a GAAP basis, they're projecting they'll come in anywhere from $9.45 to $10.20, and revenue growing in high single digits or low double digits. The biggest concern for Moody's guidance came around their EPS numbers. They were guiding anywhere from $10.25 to $11, and we could see that on Yahoo Finance, analysts were expecting at the low range $10.48, the average EPS estimate of $11.14, which is even above Moody's top of their range, and the high estimate at $12.06. A couple positive things from their earnings: they did add cash to their balance sheet. They're sitting around $2.19 billion. That's up from around $1.86 billion in 2022. And they also repurchased 0.6 million shares. If you're not familiar with Moody's, basically what they do is they give businesses credit scores. And that is important not only for the businesses, but also for the lenders. Just like credit scores, the banks want to know if these businesses are going to repay their money. So Moody's will come in and give them rankings on how stable the business is, how likely they are to be able to repay that debt. And that will allow the banks to basically, again, judge an interest rate that they should offer this money at and how much money they should be willing to offer these businesses. And Moody's helps both people in this relationship, the business and the lender, to understand those balances. So if we look at Moody's top and bottom line numbers, the trend follows what you would expect over the last couple of years. Here we have their revenue, and we can see that it peaked out in 2021, which makes sense because money was cheap. Interest rates were low. People were looking to borrow money. That means they have to go to Moody's to get their credit rating. And ultimately, as interest rates went up, we saw their revenue drop off. And by late, or actually early 2023, we saw them hit a low trailing 12-month revenue of around $5.4 billion. Now, with some of these concerns kind of starting to go away, we've actually seen an uptrend in their top line numbers. And you can see the same trend on their EPS, where again, they peaked out at the end of 2021 with around $11.78 of trailing 12-month EPS. From there, however, their EPS fell all the way down to the end of 2022 and early 2023 when they were sitting around $7.44 of trailing 12-month EPS. But that has started to uptrend. Year over year, we could see that they're up around 38% on their EPS numbers. That is massive. And if we continue to to see interest rates fall throughout either 2024, 2025, and 2026, I would expect that these numbers will go back up as, again, businesses are looking for credit ratings. And Moody's does do a good job of decreasing their shares outstanding. We can see that over time, they've decreased their shares outstanding year over year by anywhere from 1 to 1.5%. I'd love to see that number higher. However, Moody's, because of how stable the stock is, they don't really get great buying opportunities to buy back large portions of their own shares. And because of how stable the business is and their consistent growth, Moody's really trades at a premium compared to the market. Right now, their forward P ratio is sitting around a 32.5. And if we look over the course of the last year, it really hasn't traded down much. We can see that it was trading at a 27.7 back in September. However, it's always traded relatively around that 30 to 35 range. For comparison, a very similar company is FICO, who is well known for their FICO credit score, and they currently trade at a 49 forward P ratio. So when I look at this little dip, I see it as an interesting buying opportunity. Moody's tends to be a stock, like we talked about at the start of the video, that just goes up over time. That means you don't have a whole lot of good opportunities to get into this company. And I've wanted to build out a position in Moody's because I think the business model is very stable, as well as what I think we are going to see macroeconomically over the course of the next 3 years is the lowering of interest rates, which will have a very good impact on Moody's business model. So I want to get a position started, and maybe now is the time. Maybe I'll hold off a little bit and see if the stock falls a little bit further. But keep in mind, do not buy a stock just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day.